every week, the U.S. commercial banking system reports into the Federal Reserve growth, well, basically end of period numbers for really just about every category within the balance sheet. So you can look at different categories of lending activity. You can look at the liability side of the balance sheet, deposits and so forth, and see how all that's doing in the aggregate, not at any individual bank level, but in the aggregate. And it gives you a pretty good real-time read on what's happening from a lending standpoint across the country, so at least within the banking system. So we tend to call that out, particularly when it's during periods that are more interesting, just because historically there's been a strong correlation between the rate of change in bank loans. So basically, is bank lending accelerating, slowing down, and the associated effect on real economic growth. So what we find in looking at both the trend, where we've sort of been going on a year-to-date basis, as well as over the last, call it 3-4 weeks, is generally across most, if not all categories, we've been seeing rate of change deceleration or slowdown. So to go through a few of the sort of more important or impactful categories, if we look at commercial and industrial lending, C&I lending, that's down now to just a little bit above flat. So just 0.7% growth there on a year-over-year basis. If you went back about a year ago, those numbers were up about 15%. So we've sort of gone from a plus 15% in commercial industrial lending to less than plus 1%. On the commercial real estate side, that category too has decelerated, and in the last 4 weeks has slowed year over year from up 7.8% to 7.3%. Might not sound like a lot, but that is a lot. If we look on the consumer side, we look at credit cards. Credit card lending has slowed from 11.4% growth 4 weeks ago to 5.4% growth as of the latest week. Auto lending's been negative for some time and remains negative. It's still a negative 2.2% year over year. It's about what it was 4 weeks ago. So in the aggregate, bank lending in total is up 4.6% year over year. That's down from 4.8% 4 weeks ago. So this is a trend that's been in place for some time, a trend that clearly persists. And this rate backdrop that we're in is, almost assuredly going to keep that trend going. So I think we're finally hitting that wall. None other than the head of Citadel himself talked about that in an interview a few days ago. Just the fact that he was getting very nervous about things because he thinks we're finally running into the point where the rate backdrop is becoming very restrictive. So
on that Ken Griffin interview, who you alluded to from Citadel, I watched that, and he was still like, what you just did is really week over week, and we update everyone as the data rolls in, right? I mean, he gave people that comment with a 12 to, I think he said a 12 to 18 month lead lag relationship on rate impact, right? I mean, what we're trying to do, which is true, right? I mean, it's like what he said is true, obviously. So what we're doing is not sitting there giving you a feeling about that. What we're doing every week, for those of you that are new to this today, is giving you an explicit and mathematical update when that data that he's referencing in terms of the cycle itself, we're just telling you what that's doing. That's a much more precise and reoccurring update, right? Like, you don't just get to call Ken Griffin at Citadel for an update or get all of his company, all of his guys, again, like they pay us too. So it's not like, his guys aren't getting the data or that he doesn't see the data. It's just not his job to be in the weeds on it, but it's ours.
Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.